are times where someone has actually taken out a senior has taken out a reverse mortgage and the family didn't know about it and the family doesn't know what to do about it and let alone and you know how life is, right? Life works this way: if something bad happens, it gets repeated 11 times.
Yep, yep.
And anything good happens, it doesn't get repeated hardly ever, maybe three times they say. All right. That's just how we are, as people, right? So everyone wants to know about this because usually and because the question is something it's a seminar we actually do at NARAB, National Association of Real Estate Brokers, which is the oldest trade organization for African Americans in real estate. Shout out to them. Uh, we came up with a seminar called "What to Do with Big Mama's House." It's one of actually, it's not we came up with it. It's one of the ones that we put on Wealth Building Day. Okay, it's called "What to Do with Big Mama's House," and reverse mortgage comes up in that conversation because everyone knows that that house is worth something, and the question is, all right, when the house is sold, how much are we going to get from that? And then if there's a reverse mortgage on there that we know about, well, how does that work? How much time do we have? Things like that.
Gotcha,
Yep.
gotcha. So,
So I think it's a great topic.
gotcha. So, let's start off by introducing yourself and telling us a little bit about what you do in general.
Sure, absolutely. So again, Brian Washington, my NMLS number is 658931. That's for my compliance folks out there. But I am a loan officer, senior loan officer with Loan Depot. Loan Depot is a nationally ranked company, usually in the top 1% in all the major categories. When it comes to first time home buyer programs, we've been number one. Renovation products, number one. So we're in the top 1% usually all the time for something, our VA loans. And now even reverse mortgages, we're definitely making some noise there. So myself, I've been in the mortgage business now since 2002. And prior to that, I was doing loans and investments. So I really take an advisory approach. Always try to make sure that, when I talk to clients, whether we're doing, their first home, be it an investment property, be it their dream home, being it a renovation loan, and now reverse, I always make sure I take that advisory approach. Try to use the latest software and technology to make sure the clients understand, okay, hey, this is what's going to happen when we go to closing. This is what your monthly payment is going to look like, et cetera, so on in the process. Again, I take an advisory approach. Been in this business now almost just under 25 years. Sounds funny saying it that way, but yeah, like to help get it done.
Yes, sir. So, I'm I walk into your office, man, and I don't know what I want. Do I want a traditional mortgage or do I want a reverse mortgage? Because I just hear a lot of different things out there. What determines what loan I should go after?
It's a great question. Honestly, it just depends on the person. Many times, when I'm talking to, a client, I'll refer back to this scenario more than once because I think this really encapsulates what and how a reverse mortgage can work for a client. Okay. So one of my clients that I've helped in the past buy a home. She's now in a situation where she has, retired. And now, of course, your income in most cases, it doesn't go up, right? When you retire, it goes down. Okay. So she still got this mortgage payment. The good news is she's got equity in her home, which kind of goes into the name of the reverse mortgage, which is HECM. Okay. Home equity conversion mortgage. Home equity conversion mortgage. So you're converting the equity, okay, into something that's going to benefit the client. So again, going back to this client, she is like, hey, Brian, mortgage payment is a little too high. I'm happy with the house, but At the same time, I'm thinking about, downsizing at the same time. So what happened here is we structured two scenarios. One scenario, she could stay in the house and have no mortgage payment. The other scenario was sell the house. Okay. This is where it gets really interesting. Sell the house, buy a new home with the reverse mortgage or HECM. Okay. Have no other debt and have no mortgage payment. So all of a sudden, just from a broad stroke standpoint, we figured out at a high level she was going to have to figure out what to, after she paid her other expenses, she's going to have to figure out what to do with $3,000 per month. Okay, I said, you're going to be calling me at some point and say, hey, what do I do with this? Now, I don't have the answer because I don't wear that financial advisor hat anymore. All right. I don't have my, licenses, that I had when I was in Atlanta. Now I'll be referring her to one of my financial advisors and say, okay, now that you've got your emergency money in the bank, you got 30 some $1,000. Now let's put the rest of that away.
Gotcha.
Okay. Yeah.
Got,
So so that's
gotcha.
that's a nice way to look at it because I was introduced to Hecklem's reverse mortgages years ago. Um, and it was, a client actually introduced it to me. Like I said, I live in Atlanta, Georgia. I was doing loans and investments. That means I was in a bank branch. And one of my conversations at the bank branch, I could be talking to someone about a basic checking account. The next conversation, I could be talking to them about, their investments. Somebody left behind money for a trust or inheritance. Okay, what to do with that money? Another person, could talk, talk to them about a commercial transaction. And then this one client came in and he said, here's who I am. I'm doing my profile. And he says, I don't have a mortgage payment. I said, oh, okay. But you said you had a mortgage. I do, but I don't have a mortgage payment. How you want to explain that? How does that work? He
Right.
said, it's called a reverse mortgage. So that was my first introduction to it. And, hey, he didn't look like us. It was a new thing. And this comes from HUD. This product comes from, one of our federal government agencies. So does that mean it's safe? Does that mean, nothing bad can happen? No, you have to still manage it properly, just like anything else. Okay. So it's a great product for, to your point, which is you're leaning toward like, who is it for? Who is it for? Is it for everybody or is it for some people? I would say it's for some people. Not everyone's going to be able to qualify because the qualification really boils down to how much equity you have in your home and your age. Okay, so those are the two starting and major factors into, all right, is the HECM, is the reverse mortgage product, is it a good fit for you? Okay, is it a good idea? All right.
Got,
So now so again, my client, we're trying to look at it to see, can you stay there and have no mortgage payment? Or say again, let's say you want to stay in the house. Here's the other thing that you can do. I didn't talk about. Let's say you can't make that $3,000 payment anymore. Okay, because your income dropped. But guess what you can do? What can you pay is the question. Well, I can pay 1,500. All right. Well, if you have a reverse mortgage, you have that option. You can pay the 1,500. Okay, because what's going to happen over time, because it's reverse mortgage, and let's talk about reverse by talking about forward. With a forward mortgage, you and I both know what happens. You get a mortgage, you start making payments, right? And the balance goes down over time, right? Well, with a HECM or reverse mortgage, you get a mortgage, reverse mortgage, you make no payments, and the balance goes up.
mm-hmm.
Okay. Now, think of it this way. If you want to keep the house, or if you want to have some equity left over for your relatives, for your heirs, or for your estate, okay, you don't have to make the $3,000 payment. You can make a payment. So then the balance doesn't grow as fast as it would otherwise. Okay, if you made no payment. So you can make no payment, you can make a payment, okay, or you can make a regular payment, whatever you want. It's up to you.
Gotcha. Gotcha. So now I walk in here, man, and I'm 63 years old. I'm a buff guy. I go to the gym, man. and and is 63 age requirement? What does my property have to look like? Between my age and the property, what does that look like? What does it have to look like?
First of all, I'm glad you go to the gym. That's good. But the age is 62 is your bare minimum age now. Okay. For the HECM, you have to be at least 62 years of age. And for all intents and purposes, when it comes to this conversation, because in our business, you know how it is, for us myself, we always have to be conscientious of who we talk to and what we're saying, right? And age discrimination is a real thing in our business, right? But when it comes to a HECM, there's a backdoor, if you will, this level of discrimination. The fact that the younger you are, the more equity you need to have in your house. Okay. Or if you're looking to buy a house, if you're 63 years old, you need to have, and you're going to be buying a house and you want to use a HECM, you're probably going to need to be ready to put down, quite a big number. Okay. And there is no set number, and you probably hear me hesitating to say a number because guess what? It just depends on what interest rates are at the time. Okay. Because that's something a lot of people don't know and understand. Interest rates matter in all types of in all mortgages. So in this case, we're in a higher interest rate market than we were before, right? So now you have to have, let's say, 80% equity. But if interest rates drop, maybe you only have to have 70% equity, or because of your age. You follow me? So there are actuarial scientists, people who have thicker glasses than mine, okay, that are behind closed doors doing numbers and crunching numbers and saying, okay, this person, the average person who comes in and does a HECM loan based on their age, et cetera, we think they're going to live this long. So therefore, this is how much equity they need to have. And based on current interest rates and the equity and values of homes on average are 4% per year. So they're doing all this type of mortgage nerdy stuff behind closed doors to figure out, okay, so I can come across and say, all right, Mr. Marcellus, this is how much equity you need to have going into your new HECM or to do a refinance HECM.
Gotcha. Gotcha. So I'm in here, man, and I'm listening to you, and I'm saying to myself, well, one of the things I'm trying to consider is how to get away from my mortgage payment. So I think I heard you say that's part of the thing, right? This can help you get away from the mortgage payment per se. Is that correct?
Sir, absolutely. You can be in a situation where you don't make a mortgage payment with a reverse mortgage slash HECM. So therefore, it's a financial tool. Sometimes people can make their payments, but they're saying, hey, I want to take that money and I want to pay down debt. I want to put that money away into a savings account. I want to put that money I want to do home repairs. So maybe for 6, 7 months, you just take your, traditional mortgage that you would have paid, okay, or you're onto your HECM. You decide I'm going to use that money if you've already used it, because there are ways you can keep it, and you just put that money away to make home repairs, or you draw down on it if you haven't used all of the equity, because you can walk out of the closing and have a line of credit, say of $100,000, okay, and still not have a mortgage payment. You can draw down on that money and use it for anything else that we just talked about, whatever you want, you know. So yeah, you're 63 years old. Who knows? You might be water skiing, or you're thinking about a lake property, the whole 9 yards, right? So you can do all those great things and not have a mortgage payment. And again, I want people to think about, and I think it's great for you to put this out here on your platform, because what we want to do is make sure people know it's a financial tool. It is not a burden. Okay. We just have to manage it right.
Man, well, as a 63-year-old buff guy, man, you got me kind of excited. So what does the application process kind of look like?
It's like a forward mortgage. And here's the interesting thing. Now, some people, the question that we normally ask clients, or the conversation we get into with a forward mortgage is, what is your credit score, right? Or I need to pull your credit, do a soft pull to find out what your credit score is. I've had conversations with underwriters where the client